Good afternoon and welcome to today's daily market update. My name is James Hughes, Chief Market Analyst at ALPARI UK. We're going to look at those major stories moving financial markets so far today. And of course, this week is really focused on the GDP figures coming out of both the UK and out of the US as the week rolls on. Now, before then, we've had a few figures, and actually we've had quite a bit of market movement so far on this Monday. We've got the majority of major markets, equity markets, trading lower at the moment. The FTSE's down around 70 points. In France and in Germany, we're down pretty heavily as well, and also US futures looking to start on a more weaker note. Now, some of that down to this morning's numbers out of the German IFO business climate sentiment number, which came in weaker than expected, better than last month's number, but weaker than expected. 105.9 was the number. It's weaker, but it's not weaker by too much. But of course, we're in that time at the moment where the markets are reacting strangely to all of this market news. We spoke a few weeks back about how we were waiting to see the next big direction for these markets, and of course at the moment it still seems like we are waiting for that. The markets are really undecided of whether to carry on this rally that we've seen and whether this pullback we've seen is a buying opportunity, or whether we are actually moving into a more bear negative territory in these markets. And of course we've got key technical levels to look out for still on the likes of the S&P and the FTSE and the Dow Jones. All of these major indices trading around big levels. The FTSE 100, in fact, closing back in on that 6,000 level. The CAC today has wiped out its gains for 2013. So there is a bit of negativity around at the moment, but there does still seem to be that feeling around in these markets is that we are pretty directionless at the moment. We're like a boat with no rudder. We don't know which way we're going at the moment, and there's a lot of data coming out which could decide which way we're going to go. However, we have been looking at that data for the last 3 weeks. We've had payrolls, we've had GDP, we've had unemployment, we've had all of these numbers come out, and we really haven't been able to grab onto any of them at the moment. So we are still in that sideways market to a certain extent. We're more negative at the moment, but the markets keep rebounding around. So as we say, we did get that German IFO number this morning. It did come in slightly worse than expected, and that has really hit the market so far this morning. So I mean, we are in a bit of a mixed session so far, and I think whether we get anything out of the US later on is yet to be seen. But I think all of these major markets are going to be focused on the GDP numbers, which are coming in the next few days or so. On Wednesday, we've got US GDP. Now that's coming in Wednesday afternoon. On the UK, on Thursday, we've got UK GDP. Now both of these numbers are final numbers. So we've seen a few of the numbers come out before that, the preliminary numbers, and this will be the final reading of the GDP numbers coming out. And of course, we look at the GDP as you would expect to see economic growth and how these economies are performing, but there are far more numbers which can become important to the economic recovery and strength of these economies rather than the GDP number. And that GDP number tends to be a number that comes in after a lot of everything else that has happened and has affected it. So we will get those numbers, and they will be seen as big numbers this week. But I think the major topic of this week is still going to be the fact of the talk from the Fed and whether we are going to get more tapering, or we are going to get the start of that tapering in the asset purchasing plan. Now, last week, of course, we saw that FOMC meeting, and we got really mixed messages, which is no surprise to anyone, really. Whenever we pin a lot of hopes on one meeting or one man talking about something, it always tends to disappoint us. And when it's the US, we do tend to go both ways. We got disappointed, and then we heard what we wanted to, and then we didn't. So there was a lot going on, and really trying to decipher those words from Ben Bernanke and those results last week is going to be tough. But we're still all focusing on this tapering measure, which could be happening towards the end of the year or as we move up in the next few months or so. And that's what's been pinpointed by Ben Bernanke. And again, that's what's spooking the markets, or that's what we're all labouring on, which is spooking the markets at the moment. Whether it's something to do with the IFO numbers or the GDP figures, as I say, we are in that time at the moment where the markets really can't make their mind up. So what we're sticking our claws into today is the fact that these tapering fears are weighing on the market. So as we said, we have got negativity across equity markets. We've got some strange moves in currency markets today where we haven't necessarily got too much in the way of direction. And it could be that we get that today and tomorrow ahead of these GDP numbers. And it does feel like markets and traders are going to be wanting to find something on the economic calendar to really put their teeth into. For more news and analysis, please go to ALPARI.FOREX/newsroom. Thank you very much for listening. My name's James Hughes, Chief Market Analyst at ALPARI UK.